Hey guys, welcome to another episode of Clarence Content TV, also known as CCTV. Today, I am revealing my investments portfolio. Why am I revealing my investment portfolio? I think the main point is not to show that I'm the master guru or whatnot, but I think it's to really let people out there to learn from some of my mistakes, understand what I have done and how I've learned along the way. So here is my completely naked view of my portfolio. I do have majority holdings in my US market and the China market. So for the US, you'll see companies like Taiwan Semiconductor, SPY, Starbucks, Microsoft, Google, CRM with Salesforce, Costco, and of course you have the China market, which will have JD, Tencent, Alibaba. There are many other sectors that you can consider, for example, financials, crypto, healthcare, commodities, bonds, REITs, ETFs. All these are different sectors where you guys can invest in, but majority of my US company are in the tech, consumer discretionary, and defensives. My watch list, currently I'm looking at Lockheed Martin, McDonald's, Nike, and Nvidia. A very small, tiny percentage goes to what you can see here, where you have KOSS, EXPR, DNN. These are companies that honestly, I just want to down a bit of hype. I did something fun that I did. You know, like buy 4D, and I put money inside. If lost, okay, no. But if really, okay, it's like a bonus. It's really only a small amount of money. I don't advocate gambling, and I don't do this for everybody. The only money I'm playing is my own. Let's move on. I'll just cover a few. I do have Google, the top search engine today. I entered it at average price of $62, and now it's at $133. And I also have Microsoft. They are the market leader in what they do. I entered it at 177, now it's at 378. And of course for TSM, they are the biggest chip manufacturing company in the entire world. TSM, I think I'll be at a loss. I entered it at 113, now it's at 97.8. What do I do with this? After analysis, I will average it down along the way when I see the right spot and the right price. So when I invest in such companies, I'm not investing, I'm not trading. Fundamental analysis will be what I'm looking at. Whether they have a good economic moat, are they a brand monopoly, do they have high switching costs, do they have high economies of scale, and last but not least, do they have high barriers of entry. These are the few things that actually assures me that they are the market leader and they are able to sustain a long-term growth. And these are the exact company. When they get put back down and the market retraces, I won't panic. And in fact, I will want to buy at a better rate, at a better cost. I want to average it down. Because finances itself is a really huge topic. If you want a separate video just to understand the financials of certain companies, comment down in the comment section below and we'll read up. Defensive stocks are stocks that grow relatively conservatively. I want to have 5 to 10% per annum. Why do I want to have defensive stocks? Because defensive stocks form a really good cushion and they are one that can sustain stable growth even in the bad times. I have Costco, right, invested in 350 and now it's at 591.79. In the long-term trend, it always goes upwards, and even when there's a pullback, it pulls up and doesn't get affected too much. I think it helps to diversify my portfolio in a balanced way, and Costco is one of the ones that I always invested in my defensive stock category. The last one that I have is Starbucks. In fact, I only entered it recently. It's under consumer discretionary that could balance off my overly exposed maybe tech sector or China. But I'm not at a loss. Right at 104, now it's at 99.20. Under Simply Wall Street, their intrinsic value is at 94.20. But when I did my DCF calculations, my intrinsic value was ranging around 103, 104. So I ended in considering a fair value. I invest in Starbucks, because I drink Starbucks almost every day. And of course, if you look at their financials, right, the revenues are really high. Their net income is still stable and going higher. Cash to debt, the high debts due to their own reasons, which I'll cover Starbucks as a company maybe another day. And on their operating cash flow, I think essentially their core business that bring in the money is still over conservatively an uptrend. So why do people invest in consumer discretionary? There are a few reasons. Number one is of course diversification. Number two, you get exposure to consumer trends. And of course number three, for growth. Consumer discretionary stocks tend to perform better when interest rates are low. That will give you a very good defensive position and a good foundation for your portfolio because they essentially do not fluctuate at a very high volatility and they give you that cushion for you to be more assured. The biggest pullback for my portfolio will be China. That will be the biggest white elephant that I gotta address because people will see, hey bro, it's losing money and that's a very big holding. Alibaba is my biggest holding. My entry price is 136. It wasn't at 100 I bought it in. It averaged it down time after time after time. I remembered that it rallied all the way after COVID. It was a little bit overextended, so I wanted to wait for a good pullback before I entered in. After I entered in, a whack of bad news in China of the whole clampdown. Those who already know will already know. Those who don't know, let me know. I'll explain it to you. While of course, in terms of their financials, in terms of economic mode, brand leadership, they are still a very strong leader in the e-commerce space. They hold Tmall, they have Lazada, they have a very wide sort of business, and they are fundamentally really, really strong. Now, I'm not the perfect only make money investor. Those who invest out there, you'll know it's never like that. Fundamental and technical analysis, those are just a probability game. We're just reducing our chances of being wrong, but we're never absolutely right. The market will always be right. So that's a mistake I did, but till now, I'm still holding on. Let the market show me whether I'm right or wrong, right? So, there'll be people that are bull of China. They think that China is the next biggest opportunity, a lot of growth potential, versus the flip side, people that think China sucks, it's a sinking ship, right? It's a falling knife. I'm not here to change your mind. I'm just here to share with you my POV. Agree, disagree, is just my 2 cents. For China, the biggest problem that we're looking at is the political issues that China are facing. China has been down for the past 2 to 3 years. The last value they had was COVID, and after the whole clampdown of China economy, the trade lines, property, bam, all went down. So a lot of people might have lost confidence in that area. However, if we deep dive down to the companies individually, the stronger ones, their financials are actually the right place. And I think the bottom line of China as economy is that still the second largest in the entire world. It's really hard for the entire economy to crash. Neither is right or wrong. No matter which side you stand on, do your own due diligence before you do any investing, and of course, you can pick your side after. So for my portfolio, what you're looking at right now is not what we invest for the longest time. No, I actually change it up time to time. For once I'll do quarterly, is when most of the earnings report comes out. But normally I'll hold it 2 to 3 years. And the latest I changed this was after COVID. Usually when I shift it to another stock, is because number one, there might be a fundamental change in the company's core business model. Number two, they have reached a certain profit that I hit my risk to reward ratio. Then I'll see if they're overvalued, see other opportunities, so that I can take advantage of the next potential stock. The third reason is if I'm overly exposed to certain sector. There was a period of time where I was heavily invested in only the US tech industry. Majority of the tech stocks are growth stocks. They grow at around 15-20% year on year. But of course, with that reward, it comes with the risk. There was a tech pullback in February 2022. You can see here for XLK, it went as high as 174 on January 2022. Got a little pullback and it got sell off all the way down to a low of 111. I'm not saying that technological sector is bad, but I still have majority of my tech stocks as well. But always take periodical review to see whether what you have is still aligned with your investment thesis, your investment strategy, and of course your risk profile as a person. For those people that want to start investing, something that I learned is when I first started investing, I invest in the things that I'm using. If I have a Facebook account, I invest in Facebook. I have a Google account, I invest in Google. If you're using an iPad, invest in Apple. They are good, that's why I invest in them. These are a very basic fundamental start only. Second is speak to a few friends, provided they really know what they are doing and have a good exchange of conversation and insights. Because for example, if I'm a bull and I meet a bear, it helps me analyze my thesis and my outlook of the country way better. And thirdly, when investing, make sure why you sell matches up with why you buy. If you invested this company, for example, due to a strong fundamental point, you only want to exit them when their fundamental value has changed, and not because, for example, the stock price went down. I think there are a lot of reasons to why market pullback, and it doesn't mean that there's a change in the fundamental of how the business works. So really follow through to your strategy. That's all I have for you guys today. Once again, this doesn't have the financial advice. I'm just airing myself transparently in public so that you guys can also learn from my mistakes and things I've done. I'm not the 100% always win investor. I have my mentors as well, right? Shout out my mentors, you guys know who you are, and I'm learning. Many years in, I am still going in areas that I'm not sure of. The more I know, the more I don't know. So I hope you guys took away something for your own investing journey. I really appreciate your time watching this video, and I will see you in the next episode. Bye!